Extreme fear crypto crash. This may just be the beginning. This week's Bitcoin and crypto crash has triggered a sharp fall in market sentiment, as measured by the Bitcoin Fear and Greed Index, which collects data from social media posts, surveys, volatility and trading volume. The gauge has now fallen into extreme fear territory, dropping further after trending lower through April. Bitcoin has fallen below $35,000, and if the fear continues, then we may see the BTC to fall to the next support range around $30,000. Not a financial advice, but could be a good opportunity to scoop some BTC at a discounted price. Not just BTC will see these prices reflected in altcoins such as Ethereum, XRP, Shiba Inu and more. Stock markets have also lost ground this week, with the Nasdaq recording its longest weekly losing streak since 2012. Warren Buffett says, "Be fearful when others are greedy. Be greedy when others are fearful." The correlation between cryptocurrency and equities has been discussed fairly extensively after Bitcoin and the tech-heavy Nasdaq displayed a higher positive correlation than was initially expected. Dami DaCosta, an analyst at DailyFX, wrote in emailed comments, noting that predictions made before Russia's war in Ukraine were made under the assumption that once interest rates began to rise, supply and demand would meet. Over the past week, fundamentals have included interest rate expectations, and nobody can ignore the ongoing war, which continues to place pressure on supply constraints, particularly for commodities. Market pressure, weighing on both crypto and equities, includes concerns over soaring inflation, an increasingly hawkish Federal Reserve, and fears over a consumer spending pullback. Lastly, I would like to conclude by saying investing in stocks or crypto is not just about buying at cheap price and selling them at higher price. Investors must buy assets which hold quality with regards to long period of time you are invested.